Hi everyone, please check the pinned comment and let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bearish scenario where we are looking for a 3-wave structure to the downside in an ABC 5-3-5 wave move where the most common target for wave C is between the 1 and the 1.236, sitting between 27.2k and 26.5k. Wave B retraced to the 382, which is a common target, and the fib times that you see on the chart are taken from the high to the low of A and then put it on the high of B to compare the time it took to develop wave A with the time it takes to develop wave C. And usually wave C is a little bit more lazy, so it usually ends after the 1-to-1 fib time over here, which is currently sitting at Saturday the 19th of August. Now it means that on the lower time frame, so we want to see impulsive structures to the downside because wave C is an impulse. And if we then go to the micro time frame, switch to the 30-minute over here, I'm looking for a diagonal structure. What we're looking for over here is then a wave 1, 2, 3, 4 and eventually a wave 5 to the downside where all of the waves are zigzag structures. So we have a zigzag in a wave 1, 2, then we have a 3, looking for 4, and eventually you're looking for a 3-wave structure down in 5, where for me an interesting area is the blue target zone over here, sitting between 28.9k and 29.1k, for then a bounce to the upside. Now if price can manage to get towards this area, or at least take the low of this wave 3, I'd be looking for the end of a wave 5 of a diagonal, which then ends the green wave 1, and then a wave 1 diagonal, then a wave 2 bounce for then a wave 3 to the downside, which then is the strongest and most impulsive wave. Now wave 4 in a contracting diagonal most commonly retraces to the 0.382 and the 0.5. Now the 0.5 has been hit and price is currently rejecting a little bit. And the golden pocket over here is a less common target for a wave 4. Now the invalidation, you see one invalidation on my chart, which is the 1-to-1 over here, taken from the high to the low of 3 to the high of 4, because a wave 5 is not allowed to be longer than wave 3 in price, and this is currently therefore the maximum target for a wave 5. But another invalidation for a diagonal is the upper trend line of this channel taken from the low of 1 to the low of 3 to the high of wave 2, and you can see the upper trend line of the channel. The moment price is hitting the upper trend line over here, a contracting diagonal is invalidated and an expanding diagonal is very rare and therefore never preferred. If price would move towards the upside, then the bearish scenario is going to be a diagonal that already ended over here, but at the moment that is not preferred because this first structure is a 3-waver and then 3 and 5, so then we're going to be looking for a 1, 2, 3, 4, 5, but then 3 and 5 are single structures and not a 3-wave structure, so that's something to keep in mind. But of course we wait and see what price is going to do, and I'm going to update you whenever possible. If we go back to the medium time frame bullish scenario, then we are looking for the low already being in and an impulse to the upside. Therefore, the lower time frames are then a wave 1, 2, 1, 2, and then continuation to the upside for that bigger wave 3. The main question here is the low in for a wave 2 or a wave B after we then have a 1 or A, 2 or B, looking for 3 or C to the upside. And in my opinion, looking at the Elliott Wave structures that we had over here, the probabilities are low that this is the low, because from an Elliott Wave point of view, it is very difficult to count this as a low. This was a nice low, and if we got impulsive structures afterwards, it would have been great, but we didn't, and also price took the low once again, and this low just doesn't fit nicely into any Elliott Wave scenario. But if we at least zoom into this structure and look at potential local bullish scenarios, then over here we then have a double 1-2 scenario with the 1-2 in green and then the 1-2 in blue. The 1-2 in blue is a lower degree Elliott Wave count, which is part of the bigger wave 3 to the upside. However, you can also see the text box over here. The blue wave 1 looks very much like a zigzag structure, a 3-wave move to the upside. It also counts much nicer as a zigzag structure, and that's a bit of an issue because if this is a zigzag to the upside and not an impulse, it actually can't be a wave 1. Now previously I had a potential leading diagonal over here where then all the waves are zigzag structures, but that is like kind of invalidated also because of time, which is also the second line over here, because a blue wave 1 would then go to the end of the diagonal. But in general, time is a problem because even if you only take this as the second wave 1, it is longer in time than the first wave 1, which is not really what you want to see because it is a lower degree wave 1. And usually if we have a double 1 2, you have a 1 2 1 2 1 2, where each wave 1 is shorter in time and price than the first wave 1. But this one is longer in time and maybe even longer in price as well, so it just doesn't really work nicely. Then we have eventually a wave 2, common targets for wave 2 between the golden pocket and the 786, also the 0.5, but that one has already been hit, for then eventually looking for a bounce to the upside. Now, can we count this structure over here impulsive to the upside? Like, is there a bullish count? There always is, because in Elliott waves you always need a bullish and a bearish scenario, but in the end it's about probabilities, which I will talk about at the end of the video. In this scenario, which then is the more bullish scenario, as we are looking for a 3 wave in a wave 2 before then continuation to the upside, I'm looking for a WXY, W being a zigzag over here, currently working on an X for eventually a wave Y to the downside, where in this particular scenario I can't really count wave Y over here and call this a final structure, also because over here it doesn't look too impulsive, but mainly because then we have a double zigzag in a zigzag in W, then we have X, and then we have a zigzag in a wave Y. But then this wave X, if you then put this wave X on this pivot over here, Fibonacci wise, it did hit the 382, which is good. However, it didn't go above this trend line, which is important in a double zigzag. It's a trend line taken from the high of W to the high of the first B in an ABC, and you definitely preferably want to see wave X going above this trend line, which isn't the case. So therefore, in this scenario, still looking for X to go up here and then for a wave Y to the downside. But another problem we're starting to get already is time, because if this is a wave 1, then the problem now is that all of this is then going to be a wave 2. And time-wise, that means that this wave 2 is incredibly long in time compared to this wave 1. And waves also have a time relationship besides a price relationship, and this does not really support a wave 2 at the moment. If we look at the CVD divergences, then over here we have bearish CVD divergences going on, lower high on price, higher high on CVD, also between these two lower highs as well. But this one, lower high on price, higher high on CVD, already played out as price took this low over here very nicely just now. So this divergence played out, and the target of the bigger one over here is this low. Currently no bullish CVD divergences. I do think it's important I actually show my target boxes over here. So we have the support area I already spoke about at 29k, and as an important resistance area looking at 29.7k to 29.8k. Finally then, the probabilities of the different scenarios. On the medium time frame, the currently higher probability Elliott Wave scenario is the more bearish scenario, where we are looking for a price to move to the downside in a wave C, looking for that area around 26k. On the low time frame, that also means I'm then looking for impulses to the downside, a 5-wave structure to the downside over here, where this is then a wave 1, 2, looking for then a 3, 4, and eventually a wave 5 around this area. And if we go to the micro, then as it stands now, as long as it is not invalidated, the higher probability Elliott Wave scenario is a diagonal. Now I've shown you the invalidation. One is the one over here as an invalidation at the lows, and the invalidation at the high of where price is at the moment is the top of this channel. The moment this channel is taken, I can imagine price continues to the upside to at least this target box. However, that of course doesn't go in a straight line, because there's a reason I still have this white box on the chart, because it is still a resistance area, as we still have an untapped daily naked point of control at 29,550. So even if price would hit the top of the channel, it can act as resistance, of course. And then once resistance is hit, it can move towards the downside as well. And then we observe and wait and see for what happens next. But as long as the upper trend line isn't hit, the diagonal is currently the higher probability Elliott Wave scenario. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.